Richard, UK mid-caps had a slightly tougher but very decent year in 2025 than the FTSE 100. Tell us a little about the trends that were working through the market at that particular point in time and how you see those ongoing in 26.
Yeah, you're right, Mike. I mean, it's good to see the demand for UK equities. I mean, the FTSE 100 up 22% capital return for 2025, but there was a lag further down the market cap spectrum with the FTSE 250 up 9% in capital terms. So good to see the demand, but the equity part has been very much at the large cap end. In fact, further down the market cap spectrum, we have lagged. And again, it's really come through this second half of 2025 because of the sort of macro uncertainty that we've seen in the second half of this year, the slowdown in sort of GDP growth. And again, that sort of budget uncertainty that's been buffeting those sort of domestic stocks. We would expect this outperformance, hopefully the 100, to broaden out and diversify, which we think is ready to capture the mid-caps and sort of lift that opportunity for 2026.
But are there any headwinds that you would also see that could come through in 26 that might bring that revaluation, that more optimistic scenario to a bit of a stop?
Logically, those headwinds that have hurt the underperformance in 2025, we think could become tailwinds for 2026. And I think there's probably four areas I think that investors are going to look at very closely for 2026. Firstly, it's got to be, the outlook for economic growth. We have gone through a soft patch in the second half of this year. Yet again, it's the second year now we've seen a second half slowdown. Yeah. Again, we think due to budget concerns and consumers and businesses just holding back and deferring expenditure. So we need to see a resumption, we think, of economic growth. Of course, we've got 4 interest rate cuts that we had in 2025 yet to feed through. So hopefully growth should come back. The other point I'd mention is certainly what's happening to inflation, yes. And this then leads into interest rates. And I think we're seeing now the peak of that second wave of inflation, certainly coming down for 2026. Expectations, again, from the bank and OBR, we hit 2% by mid-year. We've seen energy costs coming down. We've seen helpful moves on food inflation and slowing wage growth as well. That will allow, hopefully, then the third point, that interest rates hopefully can continue to be cut at a gradual rate for 2026. 1 or 2 cuts being priced in. We think if the economy stays pretty cool and loose, there might be further to go on rates. And then finally, I think the big point is politics. What we've got this year is a Labour government under the microscope, not delivering on their growth agenda, and a fractious left-wing party wanting further spending and probably more tax rises. So come local election, we think that really is a bit of a make or break time for Starmer and indeed Reeves. And there could be, we think, either a political challenge, leadership challenge, or indeed, slight loosening of the fiscal situation.
So given all of that, the foundation blocks are quite interesting. There's some political risk in there in the mid part of the year. How are you positioning the portfolio?
The components are there really for, we think, double-digit returns for the FTSE 250. And those opportunities are quite broad across domestic and international stocks and sectors as well. We do like stocks such as Premier Foods, which is a bit of a defensive growth business, quality value business, staples in terms of Mr. Kipling and Bisto, for example. We do like some of the cyclical recovery names that we find in the mid 250 index. We'd call out Bodycote, international industrial business, some structural growth in there as well, some cyclical tailwinds to come as well as self-help. And then finally, some of the structural growth opportunities you can find in the 250, namely, let's say, computer center and IT services and supplier of hardware globally around the business, trading on very undemanding ratings. So, a real mix of, we think, strong fundamentals and quality companies that we think are sort of certainly overlooked and undervalued at this point.
Richard, thank you very much indeed for quite a bright outlook for 2026.
Thanks, Mike.